Have you ever wondered how the income tax department determines the tax liability, or how they will verify the returns filed by the taxpayers or the assessees? So the answer is the assessment. So whatever income tax returns filed by the taxpayer or the assessee, there is a procedure by which income tax department verifies that whether it's correct or not. That procedure is called the assessment. So there are 8 different types of assessment, and in this module we will look at the self assessment under section 140A of the Income Tax Act 1961. So self assessment is the best way of assessing the taxable income. Here the initiative is taken by the assessee. What assessee will do, there are 4 steps. First is, he will calculate his taxable income. Then he will allow the compute the tax liability, taking consideration of tax rebate, surcharge, anything, marginal tax relief, all that, and he will end up at the tax liability. So tax liability, from he will deduct the TDS, tax deducted at source, TCS, tax collected at source, advance tax paid. Then if any balance is there, he will pay that self-assessment tax and he will file the tax returns. So you have to remember, when in the case of self-assessment, the remaining tax as per your calculation has to be paid before filing the tax returns. So in self-assessment is an easy method of filing your tax returns. So you are only taking the initiative of assessing your tax liability and paying the remaining tax, balance tax to the income tax department and filing the tax returns. What are the advantages? This saves time. This helps in the tax administration. This, you are taking the initiative, that income tax department will appreciate. So these are the advantages. If I'll make it clear with the help of an example. So the example is, see, imagine the tax liability of a person. Mr. A is 1 lakh. He has paid advance tax 60,000 and TDS deducted from his income is 20,000. So he has paid 60,000 plus 20,000, 80,000. Now the balance tax remaining, what he has to pay is rupees 20,000. So we know that for individuals, the deadline for filing the tax returns is July 31st. So before July 31st, he will pay that balance tax due from him, that is 20,000, and after that, with that record, he will file the tax returns. So this is the procedure of self-assessment. So self-assessment is encouraged by the income tax department because it will reduce their workload, and it's better than not revealing your income, is not filing the tax returns on time, and the legal complications will be there. You can avoid all this by following the simple procedure, self-assessment. So we encourage everybody to do self-assessment, so to reduce the burden of the income tax department.